Welcome back to Market Day Report. Let's jump into the markets. We'll start with the corn market as it's moving in front of tomorrow's World Ag Supply Demand Estimates, or WASDE report. It comes out at 12 p.m. Eastern Time. September trying to claw its way back up to $4. It's struggling though, $3.99 3/4. It's a half penny higher. The December new crop has a little more strength in it, trading at $4.16 3/4. It's a penny and a quarter higher. And the bean market, beans have been down 1% now year to date, with losses over the past 5 sessions and the past 30 days of 5%. So beans at one point were a little higher year to date, but have pulled those back. And you see November now at 10.07 3/4, half penny higher, but still that 9.95 is a bit of a hickey on that September contract. Let's go to wheat. And the wheat market, we'll start with September on Chicago, and it's $5.51 3/4, up 4 3/4 cents. And that's what's happening in Chicago, but over for Kansas City, and it's kind of funny we say Chicago, and it all moves through Chicago now. September up 5 1/4, 5.29 1/4. All right, let's go to Chicago. And Ted Seifried's with Zaner Ag Hedge. And Ted, markets are moving, but it's kind of like watching Jello form.
Yes, and this kind of happens before big reports. Although I don't really think this report is going to hold too much in the way of surprises. Everybody wants to talk about yield right now. Like, that's the big buzz on social media. But the thing is that the USDA doesn't. They have specific protocols to change the yield on this July report, and that's to the downside. And it's for if there's significantly delayed planting like there was in 2019, or if you have a month of June where you have rainfall totals on a national average shorter than 1.82 inches across the national average. That didn't happen. Neither one of those happened. So the yield really won't change. I guess the USDA can do anything they want. They would have to do an explanation if they were to raise the yield. But very, very likely, yields for both corn and soybeans are going to stay the same. We have new harvested acreage numbers that came from the planted acreage report. I don't know if everybody noticed, but the corn harvested acreage dropped 600,000 acres. That's almost losing a million acres of planted acreage. So the corn production is going to drop 109 million bushels. And personally, I think that translates all the way to the ending stocks. I mean, I don't think that the USDA has enough data to really reduce exports or anything like that right now. So I do think there's a chance that the corn carryover, new crop carryover number comes in a little bit lower than expectations. Maybe it gets a little bit of a positive reaction up front, but then we're going to go right back to talking about how good weather is, what the yields could be, and how high they could be. So it might be kind of short-lived if you do get a bit of a bullish reaction out of the corn report. But other than that, I really don't know if we're going to get a whole lot from this report. I think the August report is going to be a much, much bigger deal.
I think you're spot on there. Again, we're watching cash cattle develop. Asking price in the south, $230. In the north, it's $240. Let's bring back in Ted Seifried, Zaner Ag Hedge. And Ted, as we start looking at how markets are trading here on the livestock side, what are you watching?
When we talked about grains, we didn't talk about tariffs on Brazil because really, I mean, that doesn't have a big effect on grains, but it does on cattle. Obviously, we gapped higher here this morning. Feeders up almost $4 at the moment. This continues to be a raging bull market. It is very, very strong. And you do wonder if we are now getting into that sort of parabolic mode, maybe the tail end of a rally, who knows? But the fundamentals are still very strong. And obviously the market's reacting to that. But we are now broken out above the trend line that we have been respecting very well in this long-term bull market. And so when you do break out of a trend and it accelerates like it has right now, you do start to worry that this might be the tail end of it. But for today, we are very strong, especially in the feeder cattle. Live cattle kind of following along. I'd like to see that pick up a little bit more before the end, but either way, strong day for the cattle complex.
Hey, and Ted, we've been going through the charts here. Just looking at these charts, it's amazing. This August live cattle contract, wow, what a bull market.
Yeah, yeah. The August feeders even more so. Yeah, but again, I mean, these have been long-term bullish fundamentals. It's been expressed in the market. It's been expressed by the charts. But now you have this sort of bigger breakout to the upside, which is great to see. But you also have to kind of take it with a red flag, saying, okay, when we go parabolic like this, a lot of times that means we might be close to the end.